What's up, everybody? Good afternoon. This is GSG Group, the investment group. I am Garrett with GSG. Hope everyone has been safe. Everyone has been cool, calm, and collected. Going to do an update for June 2nd, 2020. There's a lot going on in the world, a lot going on in our nation, a lot going on in our economy. Let's take a look at what's going on. Got a few things I wanted to talk about today. Um, of course, protesting is still going on. With the protesting and the COVID-19 social unrest, um, it's causing a odd movement. Not really odd, but it's causing a different movement in the stock market today. There's some things that would normally be up that is down, and some things that are down that would normally be up. Right now, you look at the S&P 500, and you look at the Nasdaq, and you look at the Dow, and they're all in the positive as of right now. But the things that are holding them positive position for the longest time, or since the pandemic, the things that's been holding them in a positive position is technology. And right now, technology is in last place today. And what's number one is energy resources, and some retail, but retail that's not associated with a mall. So we're talking about Walmart, we're talking about Target, we're talking about Dollar General. And out of those retail stores, I would like to begin following Dollar General, and along with Dollar General, I would like to follow Square, because a lot of small businesses, for their POS system, they use Square um, for their accounting software, instead of because Square, of course, it takes credit cards, and you could set up a cash register pretty easily. So, looking at my positions that I'm holding right now, I'm currently at 177. I have a call put on MU Micron saying that it's going to go up to $47.50, and right now they're currently at $46.47. So I'm just about a dollar away. This contract expires on June the 5th, so I'm gonna hold on to it until its expiration date, or until it hits my sellout number. My sellout number right now is 86 cents. So right now it's at 49.50 cents. So that's where I'm at, and my positions that I'm holding, and a little bit of news that I would like to read concerning CEO's big business speaks out on racism and police violence. Of course, protesting is still going on. Protesting is still um, simulated, calculated, orchestrated. It's organized. I don't hate it. I love it. I love my people, and we are going to be as long as we be. And saying that business leaders across industries waded into the upheaval gripping the nation following the death of George Floyd, reflecting how executives increased their view. So increasingly views. So um, it's a lot of legislation that's being changed with this as well. And what what protest has done is also um, highlighted or over highlighted the situation that we live in here in America, how certain people and certain class of people are treated, and also um, businesses and leaders of businesses are worried about how much they could lose. So, as an investor, investors are also worried about what these businesses can lose. So, take that into consideration when you're placing your money in certain spots. Um, U.S. auto sales in May encouraged Detroit plan plan to rebuild inventories. So right now, GM is up 2 points or 2%, and Ford is almost up a half percent. And these items are the government is basically giving manufacturers of cars a go ahead to start rebuilding again. These are the top movers today. Take a look at them a little closely. We got some airlines that are moving up, some hotels, because everything is starting to open up a little bit more closely. And if we look at the price of gold going, if gold price is going down, we know it's going up. Rental fleet collapses. Rental fleet collapse dragged down U.S. vehicle sales. So rental sales are going to go down. Car sales are supposed to go up, but they're not up yet. Stock is barely going up, but the sales of these things are not up. Right now, Amazon is down. Microsoft is slightly up, barely up. Microsoft could be a $2 trillion company. Analysts see gains for cloud. See gains for Microsoft. Want to go over something I saw about the Fed. Of course, the Fed always chooses to speak on a Wednesday or on a Tuesday. Stock rises as reopening hopes offset concerns over ongoing protests. So, um, the what's odd is, well, what I think is odd is how investors are more concerned about the protests, and they're no longer, along with the government a little bit, they're no longer concerned about information concerning COVID 19. There's still a COVID 19 social unrest because even with these protests that we're having, these organized protests that we're having, um, we have some that are wearing a mask and a lot of those that are not wearing a mask. And I'm not against protests at all, but at least implement some type of safety and wear a mask while you protest, because I don't want you to get sick or you to get anyone else sick. And safety is the main concern when it comes to these protests. So about the Fed, worried comments from Federal Pal foreshadows even lower mortgage rates. So those that are or have an interest in purchasing a home within the near future, um, there could be even more lower interest rates when it comes to getting a home. The problem is the good thing is that the lower mortgage rates could be, it could be done. But the sad thing is still the systematic complications that you have with local banks. So that's always going to be an issue. Redlining still exists. So just to keep that in mind. Federal Reserve Chairman Jerome Powell has been out there again sounding the alarm about the potential for further damage to the economy from the coronavirus pandemic. In his newest remarks, he's worried out loud about the possibility of second round infections, which he said could be a longer and more feeble recovery. Feeble recovery. So this is one person that he has governmental economic power, but he's one person that is still worried about the coronavirus pandemic, COVID 19, social unrest. So that's one thing to take into consideration. Um, every Tuesday, every Tuesday, um, midday, he seems to speak when he speaks. So to give us an update. Uh, After the holiday last week, he did not speak, but this week, since it is a 5 day market week or 5 day bank week, he did speak. The stock market is heading higher again, and the losers are now winners. These are those who have bought in the dip or bought at the bottom, and now things are starting to rise again. But beware, there might be another dip. Um, a couple of companies I wanted to look into. One was Dollar General, ticker symbol DG. Dollar General is currently selling at $191.77 per share. And if we look at them for the year, um, well, they're doing really well. Their next earnings date is August 27th, 2020. So, what I would like to do, I'm going to formulate a plan to start buying um, Dollar General. I have an interest in Dollar General as a corporation. As my grandmother would say, the dollar store. I want to invest in the dollar store. Let's see where my buy-in would be. So right now they're currently at 192. Is this the highest they've been? Let me check them out when it comes to Robinhood. Robinhood gives me a different outlook on what things look like. So I'm gonna look up DG, Dollar General, boom. Of course, I can find it on Yahoo Finance. Yahoo Finance has a little bit more information, and I want to explain terms from a beginner standpoint. So when I go down above the about, I hit show more, and their 52-week high was $194.84. Their 52-week low was $125 even. This is for the year. Their high today is 192, almost 193. Their low to their low today is 189.85. So So looking at them, let me see when is the best time to invest in the Dollar General. Remember, we take our third rule. In our third rule, we go to the calculator. And our third rule, sorry about that. In our third rule, we're going to take 194.82, and we take this by a tenth, multiply it by a tenth, which would be 1948. So we take 1948 times 3, 1948 times 3, that would give us 30% right there. That's 58.44. So we're going to take 58.44 away from 194.84. Take away 58.44. Best time to buy is around 136. So I'm gonna do a $2 up, $2 down. Between 134 and 138 is the best time to buy. So let's look. When it was the last time, it was at 134 to 138. We look over the year. Oh, we look at it back last year in June. It was at 134, 131, 135, all the way to 139. When was it last around 138, 139? We go back to March. March, it hit 136, 139, 137. So March 25th, the sell out week was the last time it was around the buy point. So I'm gonna keep my eye on Dollar General, and I'm gonna actually set up a marker saying, let me know when Dollar General gets below 140 again, and then when it gets below 140, I am going to buy some Dollar General stock. So another company I wanted to look at was Square, because Square, let me add this to my watch list before I get out of here. Add to the watch list. Another company I wanted to look at was Square, ticker symbol SQ, for Square Inc. or Square Incorporated. And they're currently up 5.49%, with small businesses beginning to open back up. Like I said, they use their PS system to open up businesses to for cash registers and to be able to receive credit cards. Their 52-week high is 87.44. The 52-week low is $32.33. And it looks like they may have hit their 52-week high. They hit it today. See, their high today is also 87.44. Their low today is 82.38. So they had a $5 jump just in one day. So to invest in Square as an investor, Of course, I'm gonna use the same rule when it comes to investing in a company. I want to buy in at a 30% low, so I could make room for a 30% markup. So when it goes back up or surpasses their 52-week high, I could either sell out or I could hold at a specific spot. But I'm planning on to hold investments for 2 years or longer. So when you do sell out, it puts you in a different tax agreement. But I'll get into that on another date about filing taxes, income taxes, when it comes to cashing out or selling out your shares. So we take the 52-week high, which is 87.44, and we multiply this by 10% or a tenth to get our. I know it's a better way of doing it. Here, I'm gonna do it. I'm gonna do it a better way. Let me do it like this. I'm gonna do 87.44, and we're gonna multiply by 3/10, which is 30%. So $26.23. 26.23. We're gonna take 87.44. Take away 26.23. Oh, and that equals $61.21. So when will square be at $61.21 again? You could do $2 up, $2 down. We look back over the year. Um, Over the year, most of the month of August, where we at 61. So we're looking around $63, 50, well, between 58 and $63. So we'll look at the year. Around August 12th, that's when we look before that, of course, June. June it went up. But when we got the August, July, it stayed up. July, it stayed up. We got the August, it went back down. Around August 12th, that's when it hit our range. $63, $62. And then it started to flatten and go down a little bit. 61, 60, 59, 58, 60, 58. Then it stayed around 60 for a while, 61. See, all these were good buying points right here. 2 quarters, 3 quarters ago, all of these were good buying points right here. Great times to buy and hold them. Still not a bad point to buy. Then after January, the market started to go up. Hit 85 in February, and then of course with the pandemic, everything started to go down drastically. Good buying point still. Whoever bought right here at the bottom, put themselves in a pretty good position. And then it started to go up slightly, and it's still starting to slightly go up. And today it hit its 52-week high. So I'm looking at this company and I'm saying I want to be an owner. I want to buy some shares of this company. So I'm gonna myself a plan together to own some shares of this company, and I'm gonna buy in around 58 to $63 a share. That's what I'm waiting for before I start buying in. So I'm gonna start looking at Square, and I'm gonna start looking at the Dollar General to buy some stock. So that's what I'm looking at so far to mature my investment strategies. And that's all I'm gonna go over today. I want you guys to also recognize one thing that hasn't been talked about in a while. Whether you go on your Yahoo page or a Google news page,